Hey guys, it's Carter. Welcome back to the channel. Hope you guys are all having a fantastic day today. Guys, today is the day. All stocks are moving. We've had an amazing day today. So we're going to be talking about pretty much my strategy, my approach, and all that good stuff when it comes with swing trading in the stock market. For those of you that are new to the channel, my name is Carter. I've been a full-time swing trader in the stock market for over 6 years. And with that being said, we do have an amazing school where I teach people how to find these stocks, my strategies, my approach, all that stuff when it comes to swing trading and trading in the markets. And guys, today and tomorrow are the last day for the code money, and then the course is going to go up. So make sure you guys check that out. Code money, 50% off. Guys, the course is awesome. We have private live streams. We got a group chat. We got quizzes. We got lectures. Everything you guys need to get started with swing trading in the stock market. And if you're already a trader, go ahead, check it out. You always can learn more because it's awesome. So guys, let's jump into this here. So for those of you that don't know, this past week we did take a bunch of trades. So I do want to talk to you guys about it. The first one here is on Royal Caribbean. You guys know I bought Royal Caribbean. And one of the reasons I bought it here, at least for me and my approach, I really think you have to have some sort of checklist before you buy a stock. You don't buy random companies. If you buy random stocks for trading, you're going to lose money. So for me and my approach, what I do is I have a checklist. That's why having a notebook or a journal, I'll put the one that I sell on Amazon down below. But having a checklist is super important because you will choose quality stocks over quantity. So the first thing on our list is an upward trend. Trends are it's the GOAT of trading. If you watch or you pay attention to me, you know I always trade with the trend. It's like a river. Imagine the stock is a river. Imagine how hard it is to swim upstream. It's nearly impossible. So it's always better to just go with the flow, go with the trend. So the first thing, stock on an upward trend. With all of these stocks here, or most of them I should say, they're all with some sort of upward trend here. The second thing is support. So support could be a variety of things. It could be a certain price indicator. With RCL here, this stock here was trading near and around the 200-day moving average line, which is a good support for the stock here. So now here, we have a stock on an upward trend. We have a stock on a support line. And this red line, 200-day moving average line, you guys can see in the past here as support, boom. You know, we had more buying pressure in here, and here, and here. All of those, and you guys can see good buying pressure, establishing good support. So sold off down to here where we had that great move. So stock on a support line, 200-day moving average line. The next thing is, what is the RSI? So for me, I trade stocks under 30 on the RSI. So with RCL, stock was under a 30. It actually was trading at a 28, which the last time it was trading for a 28 was back in here where we had that good move. So we have all the things going in our favor. And one other thing, guys, for those of you that ask what broker I use for my trading and my charting, that has been a very common question. It's Moomoo. I'll put them down below. You guys can get 20 stocks by signing up, so check that out. But let's move on. So the next thing here is earnings. For me, I never hold during an earnings. Holding during an earnings is a 50-50 chance of making money, and that is not what we're looking for. We're looking to make as much money as possible with the highest odds possible. 50-50 is not what we're looking for. So for me, I know they had their earnings a couple of weeks or a couple of days ago, so I know, we're in a good position here. The next thing is risk and reward. So you're always looking for like a 2-to-1 or 3-to-1. Obviously, the higher up you go, the better off you are. So if you hopped in near and around that 200-day moving average line, setting your stop, below it, you could set it near and around like 3% below it, which is normal. And our target price is going to be up here at old resistance. So you guys can see the risk and reward is about 8-to-1. 8-to-1. So you're risking $1 to make $8, which is incredible. So now the last thing, how do you buy the position? So for me, what I do is I go to the hourly chart and I am looking for some sort of buying pressure, right? I'm looking for some sort of support. I'm looking for some sort of indication. So we actually entered on this position here on the breakout of the 90-day moving average line. We had our breakout here. The stock squeezed up, curled down here, and right near and around this price here, where it kind of flattened out, we set our stop loss. So for me, we set our stop loss here, and as the stock continued to sell down a little bit, we actually did sell some of our shares, not all of them. And the reason why is because I wanted to see how it would react to the 90-day moving average line. So we kind of set our stop back down below our entry point. So we did sell, though, a good chunk of our shares, to be honest with you. But overall, the stock skyrocketed up today about 6% and still made us, over $600 off the trade, which is awesome. So this is a very simple strategy. We can either enter on some sort of support or breakout of one of the moving average lines. So now we're still holding this, and we're going to set our stop below the 200-day moving average line, which is that red line here. So the next stock here that we're actually in on all these stocks here. We did buy some Google. Now the approach with Google is a very stable company. It sold off down to the 200-day moving average line. Very similar thing. Sold off down. Entered here at 156. Stock is up at 162. It was at 26 on the RSI at time of bought. So good stable position that I love here. Another one here that we bought is Amazon. Amazon had this really nice trend, as you guys can see, near and around this yellow line here. It gets great support. So it hits it, recently hit it, and then we actually had this good move going up here today, up about 2% and another 0.5% after hours, and the stock is looking very promising. We're actually looking to fill this gap here. That's kind of the plan. You guys can see where it stair-stepped it, where it kind of just gapped down, and this was actually on a bad earnings. So we're going to see if we can get some support to kind of fill that gap up, kind of like how it happened in the past here, where it gaps down and we get some good buying pressure. Another position is Microsoft. Microsoft has a bunch of support down here, as you guys can see. Good support here, good resistance up here. You guys can see heavy support, boom, 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 boom. So you guys can see it's sold off and it's rallying its way up. We actually did buy this stock twice. We bought some all the way up here at the 90-day moving average line and more down here on the support. Average cost is near and around this 109, or 410 area, excuse me. So we're actually still down a little bit on this position, but with the Microsoft position, I'm very confident in this, and if it sells off a little bit, I'll buy more. I understand Microsoft's not going anywhere, and I'm willing to hold this kind of for like the long run to see what happens with it. The next one here is Meta. Meta here was an absolute this one here, I went heavy, I went hard because I was so confident in this position. So my approach with this stock here is very simple. So you guys can see that they announced an earnings report and the stock skyrocketed up. It actually jumped for a huge company like this. It jumped quite a bit. It jumped about 12%, which is an incredible move. But then the following 2 days, it sold off back down below the earnings. So we got a great fill at about this 450 to 456. And then we bought more at 460. So right in that range here, we bought a good chunk because it was under the earnings. It sold off from the S&P, and really, if we look at this thing here, it was trading right above the 200-day moving average line, which has acted as very hard support in the past. So we are very confident in this position, and obviously it's paid off handsomely. We always hear the expression of buy low, sell high. So given that Meta sold off a bunch, I was very confident we bought some, and that's pretty much it. Buy low, sell high, and that was actually just a very simple strategy with that one. All right, so this next stock here that we recently bought was Costco. So Costco obviously follows all the checklists. Stock on an upward trend, sold off down to level of support, undervalued on the RSI. We're not going to be holding during an earnings report. We have a great risk and reward, and the biggest thing here with this one that I loved is Costco is a very stable company, and it sold off from $900 to about $800 a share. Looking at the hourly chart here, you guys can see it has very heavy support near and around this 800 mark area. So it hits it and we get good buying pressure. And recently the stock skyrocketed up, and the last time it broke up above these 200-day moving average lines in the past here, you guys can see that the last time it broke up, boom, it started using it as support and it just rallied its way up. So that's the approach kind of we're having with this. I'm very, very confident in this, and we're going to look for something called a golden cross. It's when the lower moving average line, so the 90 moving average line, breaks up through the 200, which is a very, very bullish thing for the stock to do. So guys, I hope you guys all enjoyed this. This is a very, very simple strategies you guys can do to start implementing in your swing trading. So I hope you guys all enjoyed it. If you have any questions, feel free to ask down below. Like, subscribe, and I hope you guys have a great rest of your day and take care.